Good morning, guys. Happy holidays. Happy Thanksgiving week. And today I've got a fantastic guest for you. He's the author of Mellow Your Money, How to Surf the Market and Build Your Wealth Without Stressing Yourself Out. He's from California, Florida, and I'm really happy to have him on to pick his brain and have him put out good content, information, and value for the audience. So, Mick, welcome.
Thank you, Chris. I'm excited to be here with you. Thank you.
Yeah. Briefly introduce yourself, your story, and I'm excited to dive into the conversation.
Sure. I've been in the wealth management business for about 40 years and had all kinds of interesting experiences, and I would add some misadventures along the way. And at some point, 3 or 4 years ago, I thought it might be helpful to share some of those misadventures to help people with investing and with all the excitement that we get day in and day out, and try to calm people's nerves down a bit and help people at least over time to build wealth over the long term and try to reduce the noise that's with us every seems like 24 hours a day.
Yeah, that's a great introduction and a great segue. And I really love your story and your journey. Talk about your work, your book, the motivations, the inspirations behind it, and the key takeaways.
Sure. But first of all, what I learned early on it was really my experiences that taught me the biggest lessons in life. And so I wanted to create a book of experiences and stories that would help teach people. There's plenty of textbooks out there and things you could find on the internet that give you some of the helpful keys to invest in. But what I found is that if you don't deal with your emotions up front, the minute something weird happens, whether it was the pandemic or 9/11 or something out of the blue, we forget all those lessons and we panic. And so what I've tried to do is build a collection of stories that would help people get past that, to build a long-term objective so that they incorporate the different surprises that can happen. And so when things happen out of the blue, instead of panicking, we actually use that to our advantage. And in the same way, when things are going well, we tend to reduce our stocks and we go opposite the flow of people that are not dealing with their emotions. And there's competitive instincts, there's fear and hope and all kinds of emotions that affect us when we're investing. And typically we're not thinking about that. Typically, we're just trying to make money, or we're listening to our neighbors talk about how they're making money doing this or that, cryptocurrency or meme stocks, whatever the flavor of the month is, and it gets us distracted. And so what I'm really trying to emphasize is how to relax. And I do that talking about the different times that I may have veered when I should have stayed along that long-term road.
And it's really interesting because I really wanted to talk to you about this, because I was watching this YouTube video on the Knowledge podcast, and it was just talking about this wealth management fund manager, he manages 34 billion, and he was talking about just being obsessive and really mindfulness practices and being aware and of your emotions and keeping your emotions in check. And this leads me to my next question, is because we have this change in interest rate cycle, and then we also have a pro-business administration coming in. So for the audience listening, it's Thanksgiving weekend or weekday, or which predominant emotion should they be aware of, and what are the dangers of this emotion, or how can they use this emotion to protect themselves as well as invest wisely?
Sure, and you bring up some fantastic points. And I guess specifically with, I learned how to meditate many years ago and thought it was an utter disaster. The whole point, I thought, was quieting your mind, reducing those emotions. And what I found was it's impossible. Thoughts are coming through our mind all the time. And so it was really this mindfulness meditation that led me to reduce my stress. And what mindfulness means is not to try to do anything, but actually let the emotions come through your mind and pay attention to them and listen, and then let it go and accept that at times we're going to be angry. Let ourselves be angry. At times we're going to be afraid. Let ourselves be afraid. Times when the pandemic hits, we were all afraid, whether it was toilet paper or stocks going down. It was hitting all of us in different ways. And so what I've learned over time, though, is if you stick to a long-term plan, you can pay attention to those emotions, but realize that oftentimes they're telling you the opposite thing. In other words, when we're feeling that fear, if we just try to ignore it or try to push it down, that's not as helpful as saying, when I'm feeling fear, everyone's feeling fear. And when everyone's feeling fear, the market tends to be near the low. I had an experience early in my career where I had to go back and get some data out of newspapers all the way back into the 20s and 30s. And every week going forward, I would look at the headlines, and just like today, every other week or every other month, there was something out there. Of course, there were big things like Pearl Harbor or Kennedy assassination. But besides that, every other month, there was something that looked like the end of the world was coming in. And I realized each time the market would just go along, and yes, the market had its drops and its problems, but then it would come back. And if all we did was panic out when the headlines were at its worst, we were doing the opposite of what we should be doing. And so I guess circling back to your question, I'm not saying to ignore your emotions, pay attention to them, but realize they might be telling you something different than just that knee-jerk reaction of, oh my God, the market's down, I better sell. Instead, oh my God, the market's down. If I thought I had 50% in stocks and now I've got 45% because the market went down, maybe that's not a bad time to add a little bit, or vice versa. That's what I guess I'm saying in regard to paying attention to your emotions.
I love that. And I really love this idea because I study the markets a lot. And there's this, the character I most resonate with is this Bobby Axelrod type character on Billions. And there's a scene where he's just meditating and he's being mindful and awareness of just fear and greed. And he's just trying to keep those in check and kind of using his intuition to spot opportunities, which kind of brings me to this next question, because you talked about this idea of respond versus react. And using that, what is the difference for the audience to respond versus react in a market situation?
I guess what I'm referring to is typically the reacting part would be, I'm afraid. There's something unusual happening. And oh my goodness, I've got to do something about it because I'm losing money and I've got to make it stop. And there are a couple of reasons that'll happen. First of all, it could be the instance itself is scary, like the pandemic. Secondly, it's because we had too many stocks in the first place. And so what I think would help all of us is to figure out what is that point that would scare us out of stocks when times are bad. And if we can do that at the front end, then we're not going to have too many stocks. And that's going to allow us to do the second part, which is respond. So if you had 100% in stocks because somebody told you ought to have it through the long term and don't worry about it, the first time something unpredictable happens, you might be scared. That's the scary part. That's the reacting part. On the other hand, if you deal with, the market might drop 20% in a year, like it did actually a couple of years ago. That might cause me to not be fearful, but to respond by adding to stocks, even though the headlines might be bad, because I didn't have too many to start with. There's an old expression from a great trader that said, take stocks down to your sleeping level. And don't wait till the market go down to do that. Do that in good times. And then when bad times happen, you won't tend to panic as much.
Another quite common scenario, especially in these times, because you mentioned 08 times and kind of 2020 times, that's when like extreme fear and just everybody's just on edge. But there's also like times when, for example, like now there's like this euphoric feeling and there's this issue. I've noticed it in myself is you've made a certain profit or you percentage profit in a certain amount of time or what you met these benchmarks. And then this idea like greed starts to take over and you're like, oh, I'm just going to hold because I want to make more money. And then it's really hard to sell because when you sell it, you see the stock go up and it's, oh man, I missed that. So how do you manage this FOMO and this greed especially at tops or when everybody's euphoric.
And in this period of time, that given all the social media app that's out there, that fear of missing out, the FOMO it almost, I would say, takes courage to stick to your guns, to realize that you may be different than your neighbors. You may not be able to take the kind of risk they're taking. And who knows who's telling the truth or not these days. But in my opinion, it takes real courage to create a plan that's unique to you, that includes your own risk tolerance, and then stick to it. Even when times are good, take the market or take an individual stock. When you've got, say you bought 3 or 4% of a holding and it doubled or tripled, potentially now that's 8 or 10% of your portfolio. And if you don't do anything with it, when it drops, it could dominate the losses in your portfolio. And my dad, I worked with for nearly my whole career, 40 years. He has a stock that he bought 40 years ago. And I can't tell you how many times we've taken a little bit off the top there. And if you look back, each one of those sales, because the stock's done so well, each one of those sales have been terrible. You'd say, yeah, a year ago, or 5 years ago, or 10 years ago, you'd say, how could you sell it at that price? Guess what? We put that in other stocks that also did well. Now, not all of them did, some of them did. But over time, we've taken the risk out of the portfolio, because if we never sold it, if that stock went down, it would take down the whole portfolio potentially. And so there are great companies out there that have done really well, especially in the technology field. Take a little bit off the top and still root for it. Still hope it goes up. If everyone thinks, oh, I sold a little bit now, I hope it goes down. If you have a 4% position and you took out 1%, you're still rooting for it. You're just trying to spread it to reduce the risk.
Yeah. My joke is like, if you have these problems, these are quality problems. It's like you've identified the right thing, you got in, you've written it up, and now it's like profit taking. Now it's down. Now it's a different set of problems. The opposite of that is, you talked about like a 1%, 2%, 5% correction versus a 20 or 30% correction. So how do you manage your emotions in there? It's like a 5% is okay, but then you talked about doubling down or just like reducing your risk. So talk about those situations.
Sure. And those small corrections, if you look back in the market, even since my career started, the market almost always has a 5 to 10% correction, even in years that are fantastic. I think this year the market's had those kind of corrections. And at this point, if you got nervous with a 5 or 10% correction, my gosh, you'd be selling all the time and probably again zig it when you should be zagging. And then I would add to that even the 20% correction that we had in 2022, that was a result of interest rates being increased by the Federal Reserve and people worrying about this recession that was inevitable. Of course, we're still waiting for this imaginary recession. And I suppose if you say something long enough, eventually those people will be right. But at this point, worrying about a recession coming or worrying about all the different things that are out there, stick to your plan. And if your plan is to have 50 or 60% in stocks, the market going down at 5% shouldn't affect it much. Now, the market being up over 20% a couple of years in a row, all of a sudden, if you start over 60%, maybe you've got 70% in stocks. That's the time to be a mechanic. Take it back down to that objective. What that's doing is forcing you to sell when the market is up. Now, that doesn't mean we're rooting for it to go back down. I would argue most people can't predict those things. So be a mechanic, sell when it's higher, back to your long-term allocation. And if the market does drop, well, you end up adding to stocks when they're lower. And so I think that's the part of it of dealing with your emotions. If you set your plan at the outset, then all these headlines that happen can scare you less. I think earlier you had talked about this being a pro-business administration. Those things are things that get bandied about. But if you look back in history and say, did the market do better under the Democrats or the Republicans? Guess what? It's about the same. And people who worried about this person in office or worried about that person in office, I'm not saying don't worry about politics, because obviously there's issues that are important to everybody. But what I'm saying is relative to the stock market, It's not something that's predictable. If it was, I believe when President Trump was elected in 2016, if you bought energy stocks back then, it'd be a complete disappointment. And the opposite, when President Biden got elected in 2020, if you bought all the green energy stocks, not a good place to have been the last several years. So be careful about predicting politics and investments.
Really great insight. And another one, because I love this podcast because we talk about, and so one question I have for you is because you're in the wealth management and there's Bitcoin, which is this very new asset class, and I started paying attention in 2012, and I've seen it just mature. But for the people that missed out on it, and they're like, oh man, I missed out on Bitcoin when it was a penny or when it was like sub 100, and they're like, I missed out on all, potentially these life-changing gains. And they're like, now it's, this and that is Ethereum and Solana and like NFT, all this stuff. And they get distracted. What is your advice to people that kind of miss out on these kind of really new technologies or new things? And how do they keep their heads level when everybody's, oh man, I made 40% in a day? How do you address that?
What I would say is that part of it is try to focus on things you understand. And without trying to plead too much ignorance, I've watched Bitcoin, I've watched the cryptocurrencies, but other than trading vehicles, Bitcoin hasn't gone in a straight line up to where it's at. It's been up and down and sideways, and it's had tremendous wins and losses. And if you're a trader, and certainly if you got in early, you made a fortune. I don't dismiss that. But if you're an investor, you should stick to what you know. And I think, again, I'm not looking back 10 years, but if you look back the last several years, you probably could have made as much money buying NVIDIA, which I understand that's powering AI and that's powering a lot of the high technology that we're going to be using in our future. And of course, the other technology names that we have. And I'm not telling you to own all technology because it's going to go through its issues too. 2022 technology got crushed. So have a portion in it that you understand. But on the other hand, with cryptocurrency, I'm not saying don't have a little bit for fun because who knows what might happen. But at this point in time, somebody would have to really explain what's the long-term use in it. And for example, let's look back at Amazon. Back in the 90s, when Amazon came out, I thought it was a bookstore. And I thought, heck, it's selling at umpteen times earnings, and it's ridiculous to buy Amazon. You had time. You had time to say, Mick, you're wrong. Amazon actually is going to be a lot bigger than that. And so somewhere in the 2000s, I looked at it and I said, holy cow, this is something that's going to power retail for a long time. And so that was the time to stick my toe in the water. And so most of the time you have time for these long-term investments, and you don't have to be the one to jump in. And I'm not saying cryptocurrency is not here for the long term, but of course, back in the 90s, Beanie Babies were making people a fortune for a while. And of course, they're cute little dolls, but they're not paying for anyone's college education at this point.
Yeah, I love that insight. And it's just how do you keep your head level when there's just so like now these days you've got social media and it's just like you have other means and just it's very similar to the kind of the tulip bubble craze. And you talk about activities that help you manage your stress, keep mindful, stay aware in your professional life. And you mentioned like yoga, meditation, qigong, and how does that help you make you a better fund manager?
I think what happened to me is, and actually I would reflect back to 9/11 and going through that experience, not that I lived in New York, but just being an American and going through it and traveling a lot, I needed something to ground myself. And so this mindful meditation that I learned really helped me realize that emotions can pass through us. We might be really angry at somebody or really sad about something. And unless it's something extraordinary, what you find is if you sit for 10 or 15 minutes, It's actually hard that you allow that emotion in there and don't try to force it down. It's almost hard to focus on something for 10 or 15 minutes. Eventually, your mind just naturally moves to something else and then moves to something else. And sometimes it's moving 100 times and sometimes 1,000 and sometimes 3 times. But either way, what it teaches you is that we're not our emotions. And that over time, it can relax us and convince us that not just events, but emotions, that great phrase, this too shall pass. I can't tell you how many times I've had to repeat that to myself when times were bad or some emotion was hitting me that seemed, oh, how am I going to ever get past this? And eventually it does. And life goes on. And realizing that can help you have a little bit more of almost a sense of humor as you look back at your investments. It's not a perfect, it's an art, and it's certainly nothing that we're going to be perfect at. My first stocks were horrible, and I learned a lot of lessons about what I should have done and how to analyze a stock from different ways. And thank God I took it as a tuition payment, as somebody said. That anytime we make a mistake in life, it's a way for us to learn. But don't think you're going to learn these lessons and never have a reviewed lesson, especially in the markets. Realize that we're not perfect. We're going to make mistakes and be a little more accepting. And that also is how I think meditation has helped me to have a little more of a look at myself. And then actually when I wrote my book, I tried to have a sense of humor about it and poke fun at myself and hopefully pass that on to the readers that we shouldn't take life too seriously most of the time.
And I really love that. And most of the high level, the high achieving, really the alpha, like the fund managers and the traders and kind of the professional athletes and, celebrities, they all use this area of meditation. I think Ray Dalio talks about transcendental meditation and just mindfulness. Michael Jordan, Kobe. And so and I personally like yoga, and these things help you get into your body, become more aware, just more centered, and it just opens your eyes, gets you more mentally clear. I love this idea. Can you share your passion for philosophy, how it influences your perspective on wealth? And ultimately, everybody's make more money, be more successful. But what is success? What is money? What is wealth? What are we all here for?
Yeah, and I believe that is the essence of what we should be studying in our lives. And is how do we want to lead a good life? And how do we want to have that moderation in building wealth, but having a quality of life? And I think when I studied philosophy, that's what kind of sparked me and started me along the path of trying to understand my own emotions, my own passions, and what I wanted to do in life, and how I wanted to treat money, how I wanted to accept how much is enough, how much do I need? And all these things, if we don't look at ourselves, then we are going to get distracted by the constant flood of people talking about they made this, or you ought to try this, and you ought to do that. And it's interesting, you point out these athletes and such that are doing meditation and trying to get in sync with themselves. And these are great stars. And heck, if it's working for them, we should learn something from that. And each of us are, of course, stars in our own lives. And we should realize this is our chance to grow and learn. And that's what, in a way, when I look at myself, that's what I'm here for. And so, again, it's trying to get me to accept what's out there. I'm not going to be a great athlete, but I can enjoy it and I can learn from even these experiences.
Yeah, if the best are using these tools and techniques to enhance their performance, and I even know of NFL football players that are going to Pilates to increase their flexibility and increase their strength and core. So last question before we round it out is, over your extensive career, what have been you've seen the biggest changes in wealth management, and how have you adapted, and how are you thinking about AI and positioning yourself for this oncoming disruption?
Sure. And I think taking the AI on first, I don't think we could even, maybe a science fiction writer would have some idea, but I don't think we can imagine what the impact will be 20 years from now. I think we need to have an open mind. Imagine back when the internet was coming to the forefront back in the 90s. We could not imagine smartphones and the amount of information we were going to get and paying everything online with Venmo and such. And I think that be prepared is all I'm saying. Is changes are coming, and they will always come. They're coming faster these days than 100 years ago. But one thing I'd say about the stock market is that the more they change, the emotions are with us they've been with us for 1,000 years, and they will be with us for the next 1,000 years. Even though the superficial parts of things will change, and now we can trade on our own. And 40 years ago, we were calling a broker up and paying $50 for every trade you made. And now we can do it for free on Schwab. And so I'm not saying that the superficial part has not changed, but we still make mistakes. We still get greedy. We still have hope when we should have fear. And be careful that the emotions haven't changed, and getting back to being mindful that despite all the changes that are coming, it's our emotions that will rule the day, I believe.
Yeah, I love that. And it reminds me of when I bought my first Apple stock back in 2002. And I remember that brokerage commission was $22 back in 2002. That's probably, I don't know, today it's probably 60, 70 bucks or whatever, but it's just amazing what the
I'm sure it was a decent portion of the amount you were putting in Apple, but in hindsight, that was the best $22 you probably ever spent.
Exactly. But I just remember, I'm like, man, you got to buy a lot of shares, or you got to put in a lot just to make that commission worth it. They can't just go on Robinhood and buy
a lot of apples. Exactly.
So how can people find you and check out your book and your work and contact you? I really love this discussion.
Sure. My website is mellowyourmoney.com, and reach me by email at any point, mick@mellowyourmoney.com. And the book, Mellow Your Money, is in Amazon, Barnes & Noble, and wherever you might find it. And love to get any feedback from anybody. It's a fun part of my career now that I have time to talk to folks. And of course, talking to you has been a great fun too, and I really appreciate it.
Yeah, I love these philosophical conversations, talking with the best, just picking their brains and how they view things. And keep up the great work, and happy holidays. I know you're in Florida with your family, and enjoy the holidays.
Thank you so much, Chris. Happy holidays to you and everyone else.